Have you ever wondered why trading daily doesn't lead to consistent profit? The reason is quite simple. Because when it comes to trading, right, consistency does not mean what it usually means. Usually, when we say a person is consistent, it means he's doing a daily routine, he's following what he needs to follow, he's in quite a routine schedule. And the most important thing about consistency in normal terms is that he is there daily and he is doing stuff daily. But in trading, that is the biggest issue. Consistency in trading does not mean what the normal consistency means. It's actually quite different. And this is where most people usually get affected and make their huge losses. So let's get started into today's video. Why most people out there in the market, right? They tell young traders, people who are starting out in this industry, that you need to be consistent. And let me just clarify you one thing. Being consistent doesn't mean that you have to place a trade daily. No, that does not lead you to become profitable. In fact, it does the opposite, and you take quite a lump sum amount of stops and you finally blow the account. So that's the sad part that you'll have to accept. I learned this entire stuff the hard way around. I was there every day in the market, fighting with the market, trying to get into trades and stuff, but it didn't work out for me, and it took me quite a long amount of time to realize that being consistent in the market doesn't actually mean being consistent. In fact, it means that you need to be quiet, calm, and ensure that you only take trades when you have the perfect opportunity, when the market presents itself to you. You need to be prepared for that. You need to mentally adjust yourself for that. And it took me over almost 1.5 years, 2 years to realize that. And that was when I started becoming profitable as well. So the core idea, right, about being consistent in trading, the ideology is that you need to be consistent in following your model. You need to be consistent in following your rules. That is what in trading consistent actually means. But most people mistake this, and they often start with going on taking daily trades, just clicking on the buttons, and that doesn't often leads to a good long term strategy. And I think beginners usually have this problem. I had it, just like I previously mentioned. In trading, right, and in this market, consistency requires patience. I mean, you can be consistent. You can come into the market every day. You can sit in front of the charts. You can go through the charts. You can analyze. You can tape read and do whatever stuff you want. But you need to have patience. Patience is a skill that you need to grow. Consistency is one thing, but patience is another thing. Consistency helps you improve your overall market knowledge, and you improvise and tape reading and stuff. But being patient is what saves you from placing the wrong trades. Because when you're reading the markets and you get an entry, say you get an entry, your gut might know that this is the correct entry, and yes, it might also hit the profits. But even then, if it doesn't follow your models or rules, you're not supposed to enter, because there are high chances that the market might turn around and hit your asset. So being patient, analyzing the market, and having the patience to wait and skip the day even if your model is not present is quite an important skill that every trader must acquire. And it took me, as I said, 2 years time to acquire that. And right now I'm doing quite fine thanks to that. The third most thing, right, in trading is that when you're viewing the markets, after a point, it gets quite bored. And boredom in trading is most dangerous, because people often come into trading initially for the thrill of it. And as you get deeper and deeper and you analyze that patience is a skill that you must develop, you might be at a point where you get bored a little and you might be tempted to place an entry. But that is exactly where you should need patience and you need to be proper. If boredom affects your psychology, it would affect your trading, and that is not a good issue at all. You need to be psychologically perfect, in a perfect condition when it comes to trading, in order to beat the concept of boredom in trading. Because when you're watching the markets and everything is going up and down and it's completely a crazy setup, right, it's often going to be hard for you and everyone who's reading the market to just stay still and be patient. But that is a skill that you must develop, and you must actually do the opposite of what your mind wants. That's the key thing in trading. You actually enter the markets for thrill because it's addictive, and you need to calm yourself down, you need to focus, you need to get your thoughts together and set your psychology straight. Only then can you make a proper trade, and there are high probability that that trade might hit and profit. So these rules, such as having a proper psychology, knowing boredom and overcoming boredom, as well as developing patience as a skill, and the most important of all is you need to define quality over frequency. That is the most important concept in this, because the quality of a trade matters more than the frequency. You might come in every single day of the week, 7 days. You might come in, you might hit the buttons, you might get a profit, you might make a loss. And let's say you make around 1K, so $1,000 in a week, and you were in the market every single day. You were consistent in the normal standards. But let's just take a step back and analyze what has happened here. All right. So you might come in the first day, Monday, you might hit an SL, and you'd be taking a loss, right? So let's take that as an 100. And the next upcoming days, you take another profit of 200. And the next day also, you take a profit of 2 to 400 or something like that. 1 is to 2, 1 is to 3, 1 is to 5. And you're doing all these kinds of stuff, right? So at the end of the week, you're at a point where you have earned $1,000. Good for you. But my friend, take a step back and analyze. If you had cut down those losses, say if you didn't trade on Monday and if you didn't trade on another week or anything that where you found the market was not stable and you made a loss. If you had cut that and if you had just traded on the profitable days, think about the profits that you would have made. Say for a trade, you make around 1 is to 2 or 1 is to 3. So just think about it. You would be having around 9 times, right? 1 is to 3. So you would be having around 9 times just by trading 3 days per week. Three proper trades, three proper setups. You would not be losing an extra two. You would not have any two losses that would actually cut down your profits. You would be more profitable if you trade quality trades rather than frequency based ones. So hope to see you guys around the weekends. This week Saturday, a new video is going to be coming regarding my trading reviews this week. So catch you guys later.